Folks probably logging in as we go through this, but we are going to go ahead and get started. I'm Carol Gieske with the Elgin Area Chamber. Just thrilled to have you here today and take part in our Lunch and Learn series, which has been a 9-week series with chambers up and down the Fox River Valley. We all have gotten together since COVID emerged and have worked together for joint programming because we know that there are so many wonderful experts that we can share their talent with our chamber members up and down the Fox River Valley. So thanks to Geneva, St. Charles, Huntley, Bartlett, Hampshire, Algonquin, Cary Grove, and Northern Kane County Chambers for coming together in this. We hope you have lunch somewhere. If you haven't, after we're done with this, go shop local and buy something and carry out from your local restaurant. Clearly, they're all in need of our support at this point in time. Before I introduce Melissa Davidson today, just a few notes. We're going to mute all your microphones. We are going to record this session so we can share it later on. If you have any questions, we'd appreciate you putting it into the chat box down below. And after Melissa's presentation, we'll open that chat with the questions and also open it up to any other questions. So it's my pleasure now to introduce Melissa Davidson, who is the founder of Davidson, Pargman Company, LLC. She has 15 years of experience in public accounting, previously here with Borhardt Spellmeyer, with Porty Brown. So she's done a lot of great work in her career. She works with various industries, including real estate, development, manufacturing, construction, professional services, and our beloved not-for-profit, which all of our Chamber of Commerce's are in that world, especially now not-for-profit, right, colleagues? She's got a deep audit and general business consulting and tax background. She's very much likes to engage the customers that she has, her clients, and so it's a pleasure to know and watch Melissa grow. And this is one of these wonderful success stories where you have someone who starts out on their own and now just is continuing to grow their business, and all of our chambers love to see that kind of success. Melissa's a volunteer too, besides being a full-time having her firm full-time and a full-time mother and wife. She's also a volunteer. We met initially with the accounting firms that she was with, but she also is very important in our WIM group, the Fox Valley Women in Business Group, Women in Management Group. And she also is helping Dundee Crown High School with their incubator program. We love the young opportunities that are there to show the kids what's ahead of them as well. She got her CPA in 2010 and you live in Kingston, Genoa, Kingston, huh?
Yes. Yep.
Good for you.
Yep. Grew up there, still live there. So.
That's really great. Well, we really appreciate your time, Melissa, today to share your knowledge, your expertise with those of us, and we'll kick it off and turn it over to you for your presentation. Thanks again for being with us today.
Well, thank you, Carol, and thank you, the Elgin Chamber and all the other chambers that are also involved in this. The first thing that I'd like to start off by saying is Happy Veterans Day. Thank you to all who dedicated themselves to serve our country, and may we always remember and be grateful for their service. So I'm going to jump right into our half-an-hour training. It's that time of year to begin looking at closing your books and tax planning, whether you have a business or you're just an individual tax return. This year has a lot of uncertainty. There's a lot of uncertainty still with the future of the economy, with taxes, COVID-19, and PPP. Planning right now, and this is kind of where my focus is, even with my clients, planning right now is so important to avoid any surprises come April 15th. So today's training is focused on making tax time a little less stressful and providing a year-end checklist of items that you need to gather or items you need to finalize so that you can take it to your accountant or tax preparer. So let's jump right in and let's get focused on getting your books caught up. So the first thing that I think individuals need to start with, or small businesses need to start with, is this main area. And that main area, which makes up your profit and loss statement, is the cash account. So The concept of the cash account is one thing that you need to be doing at year end is making sure all your cash accounts are reconciled, all your bank accounts are reconciled. You need to look at even your bank reconciliations that you've completed and see, are there any old outstanding checks? Or are there any old deposits that haven't cleared? What's going on with those situations? And the next step is maybe you need to follow up with some of those old and outstanding checks, or maybe you need to be adjusting those items off the book. Somehow they got double recorded as a deposit. You've got double recorded checks in there. Get that cleaned up. Make sure those items are buttoned up for when you give this information to your accountant. This same concept goes for if you're a business and maybe you have investment accounts on your books. Maybe you've got a money market. This same concept also with reconciling your cash accounts, you should also be doing the same thing with your investment accounts and reconciling those as well. The next topic that's important kind of relates to your accounts receivable. Invoices. Get invoices billed and out the door. Get them done, get them buttoned up before year end. Then even, I always recommend my clients either to be looking at outstanding invoices once a week, every other week, or even at least once a month. You should be looking at people that haven't paid and following up with them, especially this time of year when, receivables could be very tight. You need to be actions all the time because you never know what the position of that business is going to be in. The next topic is related to fixed asset. So in a business, fixed assets provides a summary of what tangible assets you own. What I like to recommend is some of my clients, they put aside, my smaller businesses will set aside a separate folder for me, whether it's electronically or a paper folder. And I have them put in any things that they think are fixed asset additions or fixed asset disposals. Maybe they sold some equipment, maybe they sold a vehicle, maybe they sold some property. It's nice to have those bill of sales, the closing documents in a separate location that you can remind your client, or not to your client, but to your accountant or tax preparer. So this is just a list of items that I think we need to go through that you want to make sure that you're providing. The first thing is maybe you purchased a land or a building, or you sold a land or a building. Make sure you pull together those documents, that bill of sale or that closing document, and put that aside for your accountant. The next item is maybe you're a manufacturer or a small construction company and you had to purchase vehicles, you had to do some leasehold improvements, or you purchased some equipment, or you even sold some items. Those vendor invoices and bill of sales also should be set aside and put into a separate folder. The last item that sometimes that I see gets forgotten is trade-ins. If you traded in a vehicle, as a tax preparer, we also need to know what was the value that you got for that trade-in. So that's another item that also needs to get set aside. So this is just kind of a list of items that I would recommend putting aside that you bring to your tax preparer or accountant in that year-end wrap-up process. So another item that I'd like us to focus on is where I state this over $2,500. So each company can have their own capitalization policy. Some companies capitalize items that are $500 or more. The IRS has set a threshold out there of $2,500. So that's usually my focus when I'm going in and kind of preparing for taxes, is I'll look to see what items are over $2,500. And that's the threshold I use to say, if that item was expensed and it was $3,000, I'd say we need to reclass that to a fixed asset. That piece of equipment needs to be moved to a fixed asset and we need to depreciate it. So that's the threshold I use. Like I said, each company can have their own threshold, but this kind of will just give you a little bit of an idea. Also, as part of my analysis, in the fixed asset analysis, I will go through and look at items that are listed on the profit and loss statement, such as repairs and maintenance, supplies, maybe there's a building maintenance account. And I'll go through and look at those GL details and say, what are there any items that are over 2,500 that maybe they happened earlier in the year that we forgot about, and they truly should be capitalized as a fixed asset. So that's another area too, that you could go through and analyze some of those expense accounts and determine, are there any items that need to be capitalized as a fixed asset? So the next step is then adjusting. So some of this might be done by your accountant, your tax preparer, or maybe you do this yourself internally, where you go through and you adjust any of the fixed asset additions, you post them where they need to be posted. So this is also part of that fixed asset process. And then the last step that I have on here is adjusting depreciation for the year. Now, some clients handle this internally. Some of it's done by us. And this is something also that you'd want to make sure is caught up, so that way your profit and loss statement is 100% accurate. Now, one item that is put out there by the IRS is, even though maybe I went and bought a piece of equipment for my manufacturing facility. Well, and that item cost me $5,000. It's a fixed asset, but the IRS allows bonus depreciation, which means they allow in 2020 100% expensing of those equipment purchases. So anything that has a life of 20 years or less, even though it's a fixed asset, we can fully write that thing off in that year, which is very beneficial to a lot of businesses, especially given the time frame that we're in right now of the uncertainties. So that is high-level overview then on fixed assets. So the next topic of importance that I feel should be a part of our checklist is making sure you've paid all your bills and you've recorded all your expenses through December 31st. Whether you use QuickBooks, Quicken, or Peachtree, make sure you get everything in there. And this kind of then ties back into making sure your bank accounts are reconciled. So you want to make sure, in order for you to know for certain you have everything recorded, is that final step of getting all your accounts, your bank accounts reconciled. One other area that I wanted to bring up that I did not create a slide for is inventory. Small business to larger business. Some of you might be recording inventory, and at year end, it's also important that you complete a physical count of your inventory and then adjusting your inventory to that physical count at year end. I also recommend clients to review any old or obsolete inventory items and get those cleaned up off that inventory list. We don't want them, if they've been on there for 5 to 10 years and you're sure you're not going to sell them, get them adjusted off of that inventory list. The next topic is credit cards. Some clients have business credit cards. This is also kind of leads back to reconciling, making sure you have all your purchases and payments are completed through December 31st, reconciling those credit cards. Sometimes this can be forgotten. You definitely, just like your bank accounts and your investment accounts, you also want to reconcile those credit cards account. Review those reconciliations to see, are there any old outstanding items? Maybe you've doubled up on a couple things. Get all that cleaned up. Older unusual items, get them cleaned up off of that sheet. The next part of our checklist is an area that I see forgotten at times from small businesses to large businesses, where they aren't fully reconciling those loans. We're missing, those loans should be tied to those month-end statements or even year-end loan statements that you receive. Whether you have a line of credit, an equipment loan, or maybe even a building loan, you should always be reconciling those loans to verify that that interest expense is recorded correctly, because that interest expense is a deduction of the business, and you want to make sure you're capturing that interest expense as a true deduction. The next topic that is of importance is payroll. Payroll. So you can kind of look at this from multiple perspectives. Internally, some people handle their payroll internally. Some use a third-party service, whether it's Paychex, Paylocity, or ADP. Others might just use QuickBooks, or maybe your CPA does it for you on QuickBooks as well. So you always want to make sure your payroll records are reconciled. Me as a tax preparer, I always like to have, which is why I've included this as part of the checklist, is I always like to see the company's W-3, and I like to see the owner's W-2. So those are two areas that I like to see that my businesses will provide to me. Now, as internally as a business owner, you also want to make sure that you've completed all your filings for the W-2s at year end, and you finalized all your payroll tax return filings as well, because there can be significant penalties involved if you are late with that process. The next area, this is a new area in 2020 that I wanted to bring up, that I felt was very important to part of this discussion as part of the checklist. This is kind of the same concept where I have some businesses that they do their own 1099s internally themselves, or I have some that provide me a list and will do the 1099 filings on their behalf. So this new concept though with 1099s is normally we only have the 1099 miscellaneous. That's what's historically been out there. Well, starting in 2020, there's now this new 1099 for non-employee compensation. This is a new concept. It actually did exist, but existed back in 1982. So they're now bringing this back into play. So I just kind of wanted to touch base a little bit on this, that there'll be this new 1099 form. So if historically you reported information in box 7 of the 1099 miscellaneous, you will now enter it onto this new 1099 non-employee compensation form. This form, the 1099 non-employee compensation form, is due January 31st. So this form is used if you've paid someone over $600 in services performed by someone who's not your employee. So if you had subcontractors or anything like that, this is where you'd be reporting that information now, and now it's due January 31st. The old 1099 miscellaneous form will still exist. It's still out there. And where I historically see that is clients will use it for rent, royalties, even I've seen it with crop insurance proceeds or even other income. So this form will still exist. But the due date of this form, of the 1099 miscellaneous form, if you paper file, it's due February 28th. If you electronically file, it's due March 31st. So that's where we get a little bit of the separation, is now instead of having these multiple due dates, they've just separated out that non-employee compensation form that is now due January 31st. And then the 1099 miscellaneous form is due, it depends if you paper file or electronically file. Paper file, February 28th. Electronically file, March 31st. Sticking on the same concept with 1099s. So as a business owner, there might be areas where you have to provide 1099s to various subcontractors or other people. It's important that you gather the W-9 form from those companies. You want to work on getting that ahead of time, because maybe you prepare it internally, but maybe you also have to provide it to your accountant, who will then prepare your 1099s. So you want to get those W-9 forms, and you want to determine how much did you pay them to know that you have the correct amount to put on the 1099. And then if we look at it from the other way, as a business owner, you might also be receiving 1099s for services that you've performed. When you receive 1099s, you want to verify that the 1099 you received has your correct name, EIN, or social security number on it, and verify that the amount agrees as well to your income, because this is information that is reported to the IRS. So you want to make sure that it's accurate and complete. Otherwise, you might need to go back to that company that provided you with that 1099. So then I've got a few other concepts that I'd like us to talk about that I feel are of importance. Other items to consider that I feel should be part of your checklist as a business owner. And this is a concept that, the home office deduction. Some of us might even have our own office space, but now because of COVID-19, we also are having to work out of our home offices a lot more than what we historically have. So these are items that you also need to be gathering for your CPA, so that you can make sure you get the biggest deduction that you can as possible to reduce that tax liability that you might have come April 15th. So as part of that, as part of your home office, you should be gathering your utilities, gas, electric, water, garbage, internet, maybe even your cell phone if you're not encompassing that in your entire portfolio or with your normal business expenses. Those are some of the items I would consider as utilities. You also should be looking at your mortgage interest, your real estate taxes, your homeowner's insurance, and maybe repairs and maintenance. Maybe you had a separate area of your house you had to remodel to get it worked up for your office space. These are all items that you should be pulling together. And how I normally analyze this for my businesses is I look at I ask them to provide me with the square footage of their office space in their home. And then I have them provide the entire square footage of their house. And I say, okay, it looks like, and this percentage can vary across the board. 15%, it looks like 15% of your home is used for your office space. So that means 15% of your utilities, mortgage interest, real estate taxes, homeowners insurance, and maybe repairs and maintenance, we can take as your home office deduction. So this is a very important concept right now, especially with COVID-19. I've been getting a lot of questions on that, and this is some areas that you'd want to start gathering. Another concept that I see quite a bit is mileage. In a smaller business, maybe you don't actually take your actual fuel deductions, the repairs and maintenance on your car, license, insurance. You don't take actual deductions for those. You actually do mileage. So mileage, you want to start gathering that information together. How many miles were business miles during the year? Pull that mileage together so you can have a list of that you can then bring to your accountant. The other item too that should be a deduction on your tax return is if you're self-employed, health insurance. We need to know that number so we can also incorporate that into your tax return. Another concept that should be thought of is retirement contributions. Maybe you're in a SEP, or you have a simple IRA or a 401k. Do you want to provide an employer match to your employees? What kind of contributions? Maybe if you're self-employed and there's just one of you, maybe how much do you want to do for a SEP? How is that going to change your tax liability, or how is that going to change your tax projection? I always, when I'm going over tax projections, which I'm doing that quite frequently right now, this is one of the questions I always ask. And then we've got a few other items I wanted to touch on. So the top item is the health savings account. Some of my business owners, they have health savings accounts. they're looking at putting in the max, which I believe is $7,100 this year. You know, maybe they've only put in $3,000. It's like, hey, let's put as much in as possible right now because you can get a deduction for that. So I'm looking at those concepts. I'm also looking at, for some of my manufacturing companies, small manufacturing to large manufacturing, the research and development tax credit study. Maybe we need to get that scheduled to get that study done because this is a tax credit. It's a big deduction that if you're a manufacturing company and you've implemented new processes, it can be just new processes to you, that maybe we should look into doing this study. I've been seeing this with some of my smaller businesses as well as solar panels. They're adding solar panels. You need to set aside the documentation from these solar panels so we can get the energy efficient tax credit on that. The other concept is also electric cars. I've had clients purchase electric cars. Make sure you keep that paperwork set aside and bring that also to your tax accountant, because that is another huge tax benefit that you can get from purchasing an electric car. Then the last thing kind of goes back to COVID, is the PPP loan or the EIDL grant. We can't forget about that. It is very important to understand at this point that if you received a PPP loan and have applied or plan to apply for forgiveness, and it is forgiven, you've been approved for your forgiveness, that those expenses that you used, if it's payroll, rent, mortgage interest, those expenses that you used and were forgiven on that PPP loan, those expenses are not deductible on your tax return. So as a lot of what I've been doing for my clients is any of them that have PPP, we've been looking at it and we've been running tax projections to determine how is this going to impact their tax liability. And this is probably a big concept that I'd recommend, is reaching out. If you did get a PPP loan and it was significant, you need to be reaching out to your accountant or tax preparer and having them look at completing a tax projection for you to see where your tax liability is coming in at come April 15th, because we all hate surprises. They are not fun. And this could be an area that could change things. So,
All right.
Oh.
Melissa, we are at the noon hour, 2 minutes away from noon. That was a wonderful presentation, so comprehensive. If people would like to get a hold of you, would you share, please, your phone number and your contact info?
Yes, on this last slide is my business line, 815-379-8360. And then my email address is M as in Melissa, Davidson at dpc-advisors.com.
Excellent. Well, thank you so much for your time today. Really interesting, valuable advice for folks, making sure that they can get their information together by year end, and the implications of accepting those EIDL loans, those big grants, those pieces of support that have been available to so many. Thanks again to Melissa Davidson with Davidson, Pargman Company, LLC. I'm Carol Gieske with the Elgin Area Chamber. We hope that you'll join us next week with Carrie Grove hosting us to learn about business continuity. And are you ready? Given all of the circumstances that we have now, business continuity is equally as important as preparing for year end. So hope that you'll join us. Thank you everyone for your time today. Melissa, thank you very much for your time. We appreciate it. And thanks to our colleagues up and down the Fox River. We look forward to speaking with you next week.
Thank you very much.
Thank you.
Have a good day.